Hello everybody, welcome to TraderMerlin Show for your Tuesday afternoon edition. A little bit of pain out there in the streets for everybody. Hope you enjoy it, and I guess we'll have a lot to talk about because there is some more downside in the market coming tomorrow for sure. All right, here's the contact information. I guess I should do this up front for every show, but for anybody who is new, hit that subscribe button. If you are watching the show live for the first time, which probably isn't many of you, I see I got all my regulars here, is make sure that you guys, when you send in questions directly to me that you want me to answer on air live, do question marks before it so it doesn't get lost in the chatter. Okay, let's start off with this one. I wanted to start off with the overall topic, which I was trying to think of a topic for today. I've been kind of running around doing all sorts of things for Online Trading Academy and my own stuff, so it's been a busy, busy day. But you have a market breakdown in sight, and I think it's interesting when we look at the technical side of things, which of course I'm a huge practitioner of technical analysis. To me, that's where the bread and butter is, being able to read all the market participants' actions and interests. So we'll spend the first 15, 20 minutes or so just looking at this market, talking about the breakdown in sight. Now, here's our chart of the S&P 500 today, and I'll start just by saying on the day, the S&P was only down about 3%, but now all of a sudden, because of what happened with Google, what happened in the after-hour session with their earnings, has brought it down even more. At this moment right now, the Nasdaq futures for the day are down 5.35%, and I'll run through some of the top components of the S&P, so you'll wonder why it might be being dragged down as much. It's pretty clear when you see the holdings. So I said market breakdown inside. I was going to do double tap for the market because you guys know in like all the crime movies, when they do a double tap, that's just a pop, pop in the markets, and whoever that is dead. Well, if you look at the price chart here of the S&P 500, you know, we're pretty much double tapped on this gigantic head and shoulders. Now, of course, as you guys know, I traded this head and shoulders pattern back here, expecting it to continue on down. And it didn't. It actually rallied up, made a new high, which took me out. Of course, it just barely took me out, and then has come ripping back down ever since. I added a few short positions, but nowhere near the 100 and, well, I don't remember even how many I was in. I was like 149 or 159 puts. Nowhere near that at this moment in time, but I do have some puts open, but we'll see how those ones transpire going forward. That said, you know, you got to ask yourself, what's fundamentally going on with this picture? Obviously, we can look at the hard left side of this chart and see how it's continuing. I'll just do this. When you look at it here, nothing but uptrend. Great. Buy the dip, buy the dip, buy the dip. When you have this move here, though, where you came ripping back down into an area of demand, it doesn't mean that this, today is the 26th. Did I have the wrong date up there? Did I mess up the date? Maybe I did mess up the date. No. Anyway, when you have this price action here, all I really am interested in is psychology. What are the buyers and sellers thinking? So if I see this chart, that tells me, okay, it showed some weakness because it came off this all-time high, but I'm still just expecting it to be a pullback, right? It's still in an overall uptrend. As we move forward, okay, great. If this security at this moment is still strong, it would rally up and break that 4,800 mark. In this case, it's the S&P 500. But lo and behold, we sold off and made a new low. So at this point right here, I am without a doubt negative. I'm bearish because we've made new lows. We can't make new highs. We also had this little double top right here, which is the initial reason why I ended up going short on the S&P and the Russells, because we had this little double top back here on February 9th and 10th of this year. So I rode that down, had some great profits, gave a lot of it back, though, when we did that. This big move up here, which, you know, has a lot of different signs for people that want to be going short. Oh, does it say the 27th? No. Thanks, Mark. I'll fix that one. I was in a rush to get things going, so I will delete that text. You know, at this point right here on this chart, you're kind of in no man's land. It feels like it actually wants to keep going higher because it broke these most recent highs, which are back again from February 9th and 10th. So it did that, had a little bit of a bearish Harami formation, and then since then has been in a really aggressive down move. Now, here we find ourselves sitting at the lows that pretty much the lowest point that we've seen since May of 2021. Now, the question, which I have no answer for, it's just basically I got to play probability and go with it, and I think you all have to do the same thing, is where do we go from here? If you look at this S&P 500, we are sitting... Hey, Merlin, are you buying puts for your shorts? Yes. Yep, buying puts. Just direct, not now, not in the last few days, but about a week and a half ago, added some puts to my position and bought a little bit more QID in another account. So we could do a survey to see what everybody thinks. But right now, you're at this kind of decision point for the market. It's either going to break this 41.14 on the S&P and really start to tank. Really have one of three options, right? It's either going to break this 41.14 and tank aggressively. It's going to bounce off 41.14, and then we can reassess, where we either want to go long or short at that point. Or it's going to do a little bit of a head fake and then rip back up. My guess is, because we've already done the head fake, and for those who don't know what a head fake is, it's basically when you get a bias one direction, the market confirms your bias, and then immediately goes the opposite way. We already had that back here on the 24th of February. I'll show you what I mean by that. Here is, if we just put a line right. Okay, so that was a line in the sand that I was looking at. Let me trying to drag this chart up. There we go. If we have this picture right here, you guys can see that my line in the sand, which was this upper point. Let me get rid of some of these lines so it doesn't confuse you all. That 40, right around 4,200, that was kind of my breaking point. And said if we get below that, start adding some short positions, here we go. And notice that it did it one day, hit a huge down move below that, over 100 points below that line, and then just came ripping back up and then just started to vault from there. That's a head fake. That is a bear trap, is what a lot of people will call it. It suckers you in to get short, and then all of a sudden rips against you, and you had one of the a couple really nice weeks of just huge up moves. Now we find ourselves back in that same situation, although my line is going to be slightly different. I think it's basically the 4,100 mark. And here we are racing towards that on the S&P 500, and a lot of negativity is starting to precipitate in this market, which I think is going to be the factor for bringing it down even more. So, the market breakdown in sight, for me, I guess it all depends on what your strategy is, how you want to approach this. I certainly am on the bias, the bias to the short side here. If it breaks, you'll see me doing breakout trades. Now, of course, we've had Corey Lane on the program and Chuck talking about breakout trades. You've had also Brandon Wendell and Larry talking about breakout trades. So everybody has kind of breakout trades in their arsenal. The rules behind it, like how you trade that breakout, is going to be up to you. With I believe it was Chuck he was talking about. He wants to have a couple days of consolidation before that break down or break up. Well, right now, we're not consolidating at all. It's just straight free fall, especially with what we saw today. So I'll look, there's the S&P, which again, right now down 3.55%. I just don't understand what triggered the selling frenzy. The news of the Fed interest rate hike shouldn't have caught anyone by surprise. Well, before I go into the other charts, let's kind of summarize what's been going on since 2009. If you really break it down to brass tacks, what's fueled this entire thing has been massive amounts of spending, right, Joe? The money supply has increased from $4 trillion to over $19 trillion in just 2 years. That's ridiculous. So the market is flooded with cash, which creates inflation. That also allows companies to borrow money extremely cheap, because we've had some of the lowest here. I'll bring up the bond chart so we can see what the 10-year has been doing. But companies could borrow money extremely cheap. Let me bring up that 10-year for you. All right. Back here, they could borrow stuff real cheap. Going into 2020, you had almost zero for the 10-year, right? Not bad. But all of a sudden, starting to creep up. And the trajectory is very predictable. There is no argument from anybody in any aspect of the financial markets that I can see or have talked to that says interest rates are going to be going down in a big way. They're going to be going up in a big way because of inflation. Okay, fine. If that's a foregone conclusion, then this trend's going to keep moving up, and that puts pressure on financial markets. At a certain point, something has to give. You have a housing bubble, and today you had some housing data, which may be part of that trigger. We'll look at some of the housing data here, Joe, and others that I think is starting to paint that picture. Housing is roughly 15% of GDP. So, if the housing market starts to take a dive, 15% of GDP takes a dive. And if GDP takes a dive, remember, that's one of the few components that's keeping us from quote-unquote stagflation. I've mentioned this one before. You have three elements that make stagflation or can qualify for stagflation. Element number one is you have high unemployment. We don't have that. We've got extremely low unemployment. Okay, so stagflation, in my opinion, off the table. The second factor for stagflation would be slowing GDP. Well, we haven't had that. But if the housing market starts to drop, 15% of GDP is going to start to drop. So all of a sudden, there may be pressure on growth going forward. Not only from GDP, from real estate, but also from the overall economy, right? We have an inflationary environment. Everybody's going to start to tighten down in their spending. And I would encourage everybody to tighten up in your spending and start saving for a little bit. And the third one, what did I have? I had inflation. Inflation. We have unemployment, GDP, and inflation. If you have a market that has high unemployment, slowing GDP, and high inflation, that qualifies as stagflation, which is one of the hardest economic conditions to get out of. We're starting to paint that picture a little bit. So I think that was part of the reason why we saw such aggressive moves down today. But bottom line, it's been climbing this wall of worry. To me, over the past 2 months, has been kind of the defining moment on we're not going to make new highs, especially once we peaked here and started to rip down. If we break these lows, then we've got a downtrend intact, and I think the trend is going to be confirmed that we are now in a downtrend. Tom says going below Ukraine invasion day levels will be ominous. Yes, it might get us back to pre-COVID levels like 3,400 in the SPX. It certainly could. I mean, who knows? I don't know where it's going to go, and I don't want to be in the business of forecasting. All I can do is build a plan for my trades that fits what my quote-unquote hypothesis or opinion is. We're all going to have different ones, and I'm not here to sway anybody. I'm just here to present facts as I see it. So you guys make sure you do trade how you want. But this psychologically, what we're looking at with this picture on the S&P is it's no longer the same party that we saw here. I think we could all agree that party is over. Now it's a question of what does this new party look like? And if this new party, when I say party, I'm just being kind of defining the overall environment of the financial markets. If this new party starts to make new lows, then anybody who, or a large part of the majority of people who have been enjoying unbelievable gains are going to start to take some profit. And that will result in sharper moves to the downside. I mean, I've said this to my colleagues for a while, is you should be taking money off the table. That said, I've been saying it for years, so I missed out. I missed out on a lot of the up move for some of my positions. So I generally capitalize or recoup that missed opportunity on the downside, the short side of these markets. So we'll see how this all pans out. So what I wanted to show you here is, let me real quickly show you some earnings, and I'll scroll back through. And thank you for those that are putting question marks before your questions, so I know exactly which ones are directed at me. Here is the earnings calendar for today. So you guys can see 26th, which is today. You had Microsoft report earnings. Good earnings. They just barely beat, up ever so slightly. You had General Electric beat. You had Visa beat. Only one that didn't beat here is Google. Google actually missed by 4%, and it's down pretty good in the after-hour session. You had Archer Daniels Midland. They blew out earnings. You had Valero blew it out. 3M blew it out. So great earnings numbers here. But, of course, the overall market's sweeping a lot of these down with it. That said, let's take a look at what's gone on with Microsoft, because some of you might not realize how significant Microsoft is. Somebody, I think it was yesterday, was going, I don't care about Microsoft. Google's more important. No, it's not. It's not. Okay. I know what you're thinking. You're like, Google versus Microsoft, apples to oranges. Google's way more important, right? I don't think that way. I think what is its influence? So when you look at Google's influence on the markets, percentage-wise, meaning what weighting is it in these portfolios, for most of the indexes, it's not the highest one. Now, granted, there's two different Google shares, which I'll show you here in a second. So the question I have is, what's going to move these markets faster and further in either direction? Well, here's a great website. You can go to, I think it's at CliKcharts.com. You can bring up the different indexes. And I wanted to bring this up to you today because people are like, how in the hell is this tanking so much? Well, if you notice, Apple is 6.95% of the S&P 500. That is heavily skewed, right? Because you have 500 companies in this index, but one company is nearly 7%. So just for those who might be new, the column right here that says weight, that means what percentage of the S&P 500 it is. And then over here on the right-hand side is the percent change today. Notice Tesla. Remember, they recently added Tesla to the S&P 500. It's down 13.5% today. And it makes up about 2.29% of the S&P. So this is going to have a big impact tomorrow. This is going to bring down that S&P in a big way. And then you have Alphabet. So here's Alphabet. 2% plus, that's the Class A shares. and Alphabet Class C is 1.8, which means that combined, Google has about a 3.9% weighting in the S&P 500, yet Microsoft is 5.79. Now you see my argument why Microsoft is more important. If Microsoft has a 10% down day, it's going to impact the S&P 500 much more. Everybody with me on that one? Did I make it clear? Ooh, Patrick, now you're throwing me a curveball. He says, how is that weight, the weight calculated? It depends on the index. Some are market capitalization weighted, others are price weighted, so I'm not 100% sure on that one. I'll plead the fifth out there, Patrick. I like to think I know a lot. That's one I never understood exactly how they're all calculated out, but I believe it's, I don't know. I want to say market cap weighted, but I could be wrong. I did admit it. I could be wrong. I'm wrong a lot. Anyway, I thought you might find this interesting because when you look at that weighting, Microsoft just reported earnings, and here's Microsoft right now. We'll just go to a 5-minute chart. All right, so Microsoft having some whipsaw. Right now, this blue shaded area is what's happening in the after-hours session. So they reported, had a huge spike down, and then ripped back up, and is just ever so slightly down at this moment. Now, here is where it gets interesting. Google. Here's Google. Ready? Drum roll, please. That was pretty poetic. Notice that one, right? It had a slight little spike up to 2440 and then just cratered from there. It's down 6.61% in the after-hours session, looking real ugly. That's why we call that one, what do I call these things? Oh, that's right, the popcorn trade of the day. That was definitely your Google. And we outlined that one. We knew that that was going to be a volatile one for the day. But Google, all this happening in the after-hours session. Now, remember, it's only 3.8% or 3.9% of the S&P. So when I look at the S&P futures right now, what's going on with my futures chart here? Oh, there's no after-hours session. I'm looking at this going, wait a minute, what happened? There's no after-hours. Right here is where that news broke. And you can see it's been falling ever since. Okay, so pretty direct impact to Google's earnings here for the S&P. But look what happened to the Nasdaq. Nasdaq's falling even sharper. And I think, let me see if I can go, 1 second, pull up the Nasdaq 100 weightings. This is where I missed TJ. So here's CliK charts. This is even more dramatic. Microsoft, it's 10% of the Nasdaq. So Microsoft is slightly down, no big deal. But look at Alphabet, Google, right? Now you're talking 7.3% of the index, and it's down 9% right now, plus Tesla's 4.9%. You have some real big losers out there. Now, what's interesting is, you guys notice we have Meta. So Meta is down 7%. And you look at this Facebook here real quick. It's tanking in the after hours, and you're like, but why would Facebook tank? They don't report earnings till tomorrow after market close. And here it is, aggressively selling off. This is the sympathy sell-off. It's basically Facebook going, oh crap, Google got slaughtered. We're going to get slaughtered too. So it'd be interesting to see what happens tomorrow. Well, it will be interesting to see what happens tomorrow with Facebook's earnings, or Meta's earnings, or you want to call it. But this is, to me, is further writing on the wall that those tech stocks. And Tom, I hope that you're short FNGD, right? Tom loves this one, FNG. Oh no, this is the inverse. Hope you're long FNGD. Actually, talk about a great run. If you were long FNGD, which is triple long the FANG stocks, it's gone from $34 to $73 in a period of about 2.5 weeks. Not too shabby. What's the regular one? That's FNGD. I forget. I can't think off the top of my head. I'm sure Tom will tell me here very shortly with the normal directional of FNGD. This is the inverse, triple. Ooh, scary, scary stuff. So let's run through some of these other markets. There we go, FNGU. There you go, FNGU. Waiting to buy some more? Waiting to buy a little FNGU, man. I mean, you're really catching that fall in life, And again, this is what I loved about having Scott McCormick on the other day. For those of you who might just be joining us, you should definitely check out the session we had with Scott McCormick. Just love having him on and his insights out there. But with regards to FANG stocks, or catching falling knives, he says, when's the best time to catch a falling knife? When it hits the floor. Okay, so that said, Tom and others are thinking about buying FNGU, which is that triple long, which is crazy, but, manage your risk. Where's the floor? That's a long way. It's scary to think that the floor might actually be all the way down here on FNGU at about $2.38. And I'm just saying that because this is the low. It's insane to think that we have to fall that much to get back to this low that we saw back in 2020 when the COVID bottom happened. I mean, it's pretty crazy to think you go that far down on it. I've also mentioned this one a few times. A lot of people telling me in passing conversation, Merlin, there's no way this market's going to drop 50%. If it drops 50%, it's still back to where this rally started for the S&P 500 from the COVID pandemic lows. So watch this. I'll go right from this peak. We're going to drop 50%. To the dead low, you're looking at 54%. I mean, that would not be a big deal, and I think most of us would agree that the market's due for a big correction, especially when you look back historically, and I know I've shown you this many times. Here's your dot-com bubble, here's your financial crisis bubble, and, well, I guess you have the Fed bubble, right? I think this one could potentially be a little bit worse because I believe we have a housing market bubble. I believe we have an equity market bubble. Hell, I think we have a crypto market bubble that has already popped. Any reason that FNGD and FNGU don't have options? I'm not really sure on that one. It's a good question. My guess is there might actually be some sort of rule that says triple leverage ETFs can't have options. I mean, why would you need? I think that would be kind of crazy to have them, but I don't know. Let's go FNGU, and I just want to see the volume here. No, volume's ample. I think you have plenty of volume. So here's your daily volume, 11. Yeah, there's plenty of volume to call this an adequate liquid security. No problem about that. So my guess is there might actually be some rule against that. I'm not exactly sure why that is, but it's a good question. I agree, KF. Let's smash that like button for our friend. All right, I'm going to run through all these markets, and I'll spend time going through your individual questions. Let's start at the top here. There was actually some shining lights. We'll work away from the bottom to the top. Nasdaq, of course, just taking on the chin. It's the worst one out there today. And in the after-hour session, guys, it's not even double tapped. It's actually triple tapped and now below that level. So all eyes to me are on the Nasdaq tomorrow that it could potentially pull this whole thing down. You guys might remember from 2022 when I started TraderMerlin, I've been saying this entire bull market rally has been fueled by the tech sector, by the FANG stocks. You really have the small basket, let's say 10 different companies that have pulled this entire thing up. If you look at Power Trading Radio that I did for Online Trading Academy before that, I was still saying the same thing. What goes up must come down, and I do believe that if the tech sector takes a big hit, and you saw it today out there with some of these numbers, I just love this weighting breakdown. These were huge hits for tech today, and if that continues, then you could see this thing pull back much further. And I do not believe that a 54% pullback, like I just measured here on the S&P, I don't think that's out of the question. And it would still only put you back to the lows of 2020. The bigger question I think a lot of people will start to ask is if we do sell off, like, how low could we go? Do we ever get back to 666? I don't think so. I think that's never going to happen again. But, again, never say never. Koja, FNGU. FNGU is a basket of FANG stocks. So it's Facebook, Apple, Netflix, Google, Amazon. It's just the FANG stocks. All right. And if you want, again, I show you guys this regularly, but if you go to bar chart, you can actually type in FNGU. Oh, this may not work because FNGU is derivatives. And I think that's probably a good question or good comment from, where was it? It was just there. From Nick, because they use derivatives already. So the derivatives are already built in. That would definitely make sense. Here's your constituents of the FNGU. Oh, it's not giving it to me. It's all the FANG stocks. And we'll just leave it at that because it's not letting me bring up the constituents of it. All right. Now, next on our list. If we go from bottom to top, we started with the Nasdaq, which of course is getting slaughtered because of what's going on right now with Google and with Twitter or Tesla, which, by the way, check out Tesla. We talked about this a week ago. We talked about this before the offer was accepted for Twitter. Said, you know what, Elon Musk is going to have to sell some shares to clear up cash. That's the big story today. The story today was, people are nervous on Tesla because Elon Musk probably going to sell some shares to gain a profit. If only I stuck to my plan and shorted Tesla. I'm just too afraid to short Tesla or even trade it. It's too much for me. It was down significantly, down 12% today, plus another 1.4% in the after-hour session, and closing at its dead lows. This thing looks like it's going to keep on dropping big time. All right, that brings us to Bitcoin. Crypto, following suit of the market. I don't like this because I've had a trend line drawn on Bitcoin, which runs right through these lows here. And you notice we are slowly drifting lower than that. So my eyes and attention are shifting from the slight uptrend that we've had, right? We've kind of been in this little uptrending channel right here. It's now, my thinking is it's going to follow the market. And in the CIL, we actually did some interesting projections. But you look at this low point at 3280, 32,800, where it closed that gap. That ends up being the next target, since this trend line looks to me like it's broken. So I see more downside for crypto. Unfortunately, Russell 2000, let me get volume off of here. Russell 2000 is sitting right at the lows that we established on the 24th of February. Right at it. And I'll bring this line up just to make it even more evident. Boom, 1881, stuck on it. We can change this box if you want. There we are. So these are all right at an inflection point, in my opinion. We did the S&P. Here's the Dow Jones, which is the strongest of the bunch, but it's going to charge back at these lows we saw about a month ago. Gold actually showing a little bit of a Harami formation for those that want. That is a bullish Harami formation. It's a great one because what happened? It was an aggressive sell-off for about 6 days. Fell right into this previous area of demand around 1,888 and now had a small little bounce. That's a bullish Harami. Again, the way to trade that is to wait for it to break the high of today, which would be right around 1912. And finally, crude oil. There's got to be some shining pile out there in this world of poo-poo today. You had a nice update, about 3.22% for crude oil, but lo and behold, we still are, in my opinion, in this downward triangle. There you go. Oh, man. I had a lot of stuff. How much time did I spend on that opening topic? Because I think that kind of summarizes the market breakdown in sight. And again, you don't have to agree with me. You don't have to, believe anything I say. Again, hopefully it comes across as just objective analysis. Build your plan accordingly. My hope is that y'all make money when this thing, either whether it crashes or moves up. Right? Just be careful out there because the volatility is getting higher. And, at a certain point, when the Fed has already said we're going to be this aggressive, what does that mean for the markets going forward? Now, one thing I wanted to check on real quick is just to look at the Fed funds, because I did not look at this today, and it's been one thing that I'm curious about. Hello? Why are you not taking forever to open up? Hello? It's funny, the CME website is just not loading up. I feel like it's down or something. Would you say that this is the start of the everything bubble crash? It's a great question, Tom. I think that the start already happened. Personally, I think the start already happened. I think it happened a couple of months ago. But it's the follow-through. I don't think it's when we say the pop of the bubble, I think the expectation is that it's growing, and then it just goes boom and just disappears all at once. I think it's more of a deflation of the bubble, right? So it just inflated out to this. Oops, my arm's off. I think what's going to happen, it's going to slowly deflate, then reinflate a little bit, and then slowly inflate, and then deflate. I don't think it's going to just implode in one fell swoop. I think it's going to slowly start to contract. So, that's why I loved having Scott McCormick on the program. To me, it's about watching and seeing what the signs are. I've mentioned this many times that I believe the financial markets are like opening up a classic watch. And you got all those little tiny dials inside. They all serve a purpose. They all impact each other. And without it, you can't tell time properly. So I think when you look at our markets, let's keep our eye on the bond markets. Let's keep our eye on the equity markets. Let's keep our eye on the currency markets, the dollar. It's interesting how they all start to play together. And personally, just my take. Let me know in chat what you think. I personally feel like I'm seeing more signs of contraction because I'm seeing lower highs in the equity market. I'm seeing a very strong uptrend in the bond market. I have the Fed who has been adamant. We are going to front load, be aggressive with raising rates, and they already stopped tapering. That's huge. They're no longer buying mortgage-backed securities. That propped up the housing market. So you've got that housing market bubble, which is super inflated, starting to deflate a little bit. You've got the dollar index. I see Joel says, has the dollar peaked or is it going higher, moving forward towards resistance long term? The trend is your friend. I'll look at the Dixie here in a second, but dollar's getting stronger. Remember, stronger dollar means weaker economy, less exports, right? So I just feel like the shift is starting. More and more pieces are pointing southbound than upbound. And too bad Brendan's not here, because Brendan usually is the one waving the flag going, never fight the Fed. The Fed will not let the markets drop. And he's right. But they put themselves in a corner that they can't continue to support the markets. They can't keep flooding the markets with money because of inflation. So now we're going to pay, right? We, you, me, Americans, and the global economy are going to pay for this. We are going to pay for the actions of the Fed with a contraction. We're going to face a contraction in the money supply. We're going to face a contraction in the price of equity markets. We're going to face a contraction in earnings because we're going to spend less money. So this watch scenario that I explained, it's starting to build up more and more evidence for the short side. So, Tom, I think that it's the beginning of a longer-term downtrend, right? Which I think presents a lot of opportunity. I don't think it certainly shouldn't be viewed as me being, doom and gloom. Not at all. Remember, trading's opportunity. I'll make money when the markets go down, or I'm going to try to make money when markets go down. I'm going to try to make money when markets go up. Unfortunately, the people who are going to suffer, and I apologize if this sounds condescending, but it's going to be your family and your friends that are sitting there in a 401k who've been buying all this, especially the past 3 months. All your friends are just losing money if you've been buying in a 401k. Making those consistent contributions to your 401k, well, you've been buying as this market has been going sideways. So right now, everything that you bought, with 100% certainty, everything that you bought since April 13th, well, let's call it May 14th of last year, so we're a year into it, is underwater. And that's every month, people doing their 401k, buy, and they're loving it because they have huge, huge gains. However, a lot of those people who have 401ks and IRAs, remember, they've been adding to positions and building a huge base at much higher prices. As soon as this starts to drop, you're going to see 401ks drop significantly. And what I'm worried about is that some people will wake up and they begin to sell their 401k holdings and just go to cash or go to bonds. And what does that do? That further exacerbates any market sell-off, which has me feeling like the creepy little Gollum dude from Lord of the Rings, rubbing my hands going, my precious, yes, my precious. Anyway, I know, I'm a weirdo. That's okay. Noam says, so cash is king again. It's a very difficult one to say cash is king because the dollar is like the most manipulated currency. But remember, the more money that the Fed removes from money supply, they've been buying hundreds of billions of dollars a month of bonds, whether that's mortgage-backed securities, treasuries, etc. They've been buying all that. They had to create ledger entries that said, oh, here's another 120 billion. Oh, here's another. Now they're taking that away, which contracts the money supply out there. If you have the same amount of people around the world chasing fewer dollars, the dollar is going to rise. I don't think that's irrefutable. And here's your dollar index. I think that it's definitely spiked quite a bit. I mean, I feel it's probably due for a pullback, especially look at the last 4 days of the dollar index. I mean, at some point here in the near future, let's see, it has rallied from low to peak. As a currency, this is not normal, 2.5% in 4 days. That's not supposed to happen. That's one of the fundamental pieces of a currency. When you define a currency, it needs to be a medium of exchange, universal acceptance, and a store of value. I make the argument that it's not really a store of value. A store of value should be relatively flatlined. Look at that dollar chart, man. If you want to travel as an American, now you're loving it. It's like, hey, let's go travel because your dollar's buying you a lot more. I mean, look at some of these other currencies. Here is the British pound against the dollar. So for anybody who wanted to go to the UK, actually, let me reverse that. Anybody from the UK that came to America, they could get $1.4 for each pound they had back in February of 2021. Today, they can get 1.25. That may not seem like a lot, but when you're spending thousands of dollars, it's a huge deal. Look at the euro. I mean, the euro is it's a bloodletting at this point. It used to be you could get $1.24 for each euro. Now it's $1.06, and parity, my friends, is right around the corner. Parity is, I'm going to move this line. These are all dead lines to me anyway. I haven't used them in a long time. let's put this down at parity, right at 1. Right? That's the next big target after we break these lows from 2017, which is $1.03. But the trend is your friend to the bend at the end, right? So stay with this downtrend. Short the euro. But, short pullbacks. I wouldn't say short today, but short the pullbacks. Here's the U.S. against the Canadian dollar. Actually, relatively sideways. Not the best looking chart. And then here's where it really gets crazy. Anybody want to go to Japan? Anybody freaking out want to go to Japan? Yeah, exactly. Patrick says go to Japan. There it is. Hallelujah. Hallelujah. I mean, what on earth is going on? If you went to Japan in, let's say, during the pandemic, at the beginning of the pandemic, I'm looking at the lows here, you could get, for every $1, you could get yourself 102 yen. Okay, and now that's neither high nor low. It's kind of hard to make that statement, but look where we are today, up here as of the market close right now, you can get 127. That's a 20+% increase in the value of your purchasing power. So right now, anything from Japan is getting cheaper and cheaper and cheaper and cheaper, which is good for Japan's economy because that means more exports. In America, we like to buy stuff. It is unbelievable, Patrick. It really is unbelievable. Anyway, you guys are getting me all excited. As you can tell, I love this stuff. These markets are ripe. There's tons of opportunity out there. Whether you're looking at, we looked at Forex, we looked at indexes, we looked at some of these cryptocurrencies, which is a murder scene today. I mean, this is like an episode of CSI, just blood bodies everywhere in the crypto space. But you also have commodities. I mean, yesterday we had huge moves in metals. Palladium was ridiculous yesterday. Now you've stabilized a little bit, so there's definitely opportunity abound. I love it. It's exciting. Silver, I'm kind of shocked how fast silver's fallen. I actually thought it might be moving up with this market pain, but we'll wait and see. I got another 3 weeks for my options to expire. Yep, goes to 28%. Pretty ugly. All right, let me make sure I get to some listener questions here because I want to make sure you guys, I always encourage everybody. I think it helps the channel, so I've read through social media platforms, comments down below. The YouTube videos help, so you guys have been posting questions there. Let me read these a couple of questions, and I'll go to the ones that I missed earlier in chat, and hopefully keep this under an hour. So Les says, we hear about these algorithms that are constantly being run, but what are they looking for? Is it looking at where it can make a trade just to trap investors? No, I don't think that that's the case. Typically, what you're looking at with an algorithm is it's a computer program that is generally running a certain combination of technical indicators. So, for example, we could create an algorithm that says every time that the 8-period moving average crosses the 20-period moving average, that's a buy. If it crosses above, it's a buy. If it crosses below, it's a sell. That's an algorithm, right? It's just a computer-based program that's designed to facilitate trading. Now, there's obviously significant levels of complexity, but I don't believe that it's targeting individuals per se. It's just saying, let me see if I can implement a back-tested, proven strategy that capitalize on market moves, whether that's level structures like we teach at OTA, whether that's using a combination of indicators, or every time Elon Musk tweets about something, if he says positive, buy it, says negative, sell it. Those are algorithms. So it's not necessarily hunting. That said, you can look at HFT, high-frequency trading, which are essentially algorithms. They're programs, but they are designed to front-run order flow. Now, that's a much broader topic of discussion, but it still is an algorithm. And that is done by taking computers and co-locating them. So you look at the Nasdaq, right? You're like, oh, the Nasdaq's in New York. No, it's not. Nasdaq's not in New York. The storefront is in New York, but the server farm's in New Jersey. And what people are doing is they are paying to co-locate so that you know exactly where the Nasdaq server rack is in New Jersey. And the closer you are to that server rack, the less latency you have in your transaction time. And you can actually start to see orders come in before they actually go to the market, and that's what HFT comes in. We're talking literally nanoseconds before your order gets processed. So they can intercept potentially my order going to the market, jump in front of that. Now, my order's not going to move it. But what if I'm Goldman Sachs going to buy 1 million shares of Microsoft? Well, HFT could jump right in front of that and buy it. That's another form of algorithm that I think is much more complex. Most people are using some sort of technical analysis combination. The whole red light, anybody remember the red light, green light system? There was all these TV commercials about this red light, green light system and how simple it was. It was like the ultimate con job with very, very slick salespeople. All the red light, green light system is moving average crossovers and volume. If you had a short-term moving average crossing over the longer term with increasing volume, that was a sign the trend is going to keep on moving. And it's actually not a bad strategy, but you don't need to pay monthly fees to learn that software. Anyway, I'm going off on tangents. So, Les, that was your question there. Another question from Les. It's a good one. Still early in the day. This was from today. I think it was from today. Maybe it's from yesterday, Les. You can let me know. I think it might have been yesterday, actually. But yesterday, Coca-Cola hit all-time high. Good earnings. Kramer said buy. Noontime for me here, and Coke is down 0.3%. I should have backed up the truck. Look, if something's at an all-time high and Jim Cramer tells you to buy, I want you to fight all the urges on the planet to listen to him, and I want you to do the opposite. If something's at an all-time high and Jim Cramer tells you to buy, that's the kiss of death. That means we should put a mark on this screen. Let's do it. Shall we? I'm going to put a horizontal line here and say Jim Cramer said to buy. All right, so let's put that there, and then we'll put some text on here. Jim. I'll put that right up just for fun, because my guess is Coke's done. Even though I love Coca-Cola, right? And I have to have Coca-Cola with my Crown Royal. It's just the way I drink my Crown. But he's historically the kiss of death, and he just says there, buy, buy, buy. Well, I don't know if he's a scammer, Patrick. He's doing a job. He's edutainment, but remember, he is swayed and influenced by financial firms. He's got cronies in his pocket. Merlin Cocoa is down 1.35% today. Yep. Gold, good, bad, or ugly? You be the judge. I don't need me for that one. Look here at GC. I like gold long term. However, the chart, at least since March, has been ugly, right? It has not been able to make this higher high. I personally believe that we are going to see higher prices for gold. Now, we do have a Harami formation, a bullish Harami, which I pointed out earlier in the show. So really what you're looking at is a buy if it gets above, let's call it 1912. Let me see, what was the exact high for today? Yeah, high of today was 1912, so it breaks 1913. Okay, go for it. All right. What else do I got? So that was Les's comment there. All right, let me scroll back up here because I know you guys have a whole bunch of questions, and I want to make sure I get to those. I only have a few minutes left here because I don't want to do hour shows every day. Just understand what you're... Okay, we did the selling one. Koja says, Merlin, your opinion about ES daily demand around 39.70. So let's open up ES daily demand around 39.70. So you're looking at this guy right here. Yeah, that actually was where my line was. And to me, it's almost the origin of this last... It's a breakout trade, and it was the last big rip up. So I definitely think that is a good level. 17.30, and then... You know, there are some other levels, but I like this. This is, to me, is the main target I'm looking for if we break 4,100. Will be a drop down to 96.61 or 96.70. I guess you won that bet with Jeff Manson, who said buy May. Yeah, 5,000 by May. You know what? I don't know. And again, it's not a pissing contest in my opinion. I love the fact that Jeff comes on and says, "Hey, I think it's going to 5,000." You know, I love that people come on and voice their opinions. If they disagree with me, that's great as well. You can disagree with me or anybody else. Just do it in a friendly way and have the facts to support your decision. I mean, in hindsight, Jeff's right. We will get to 5,000. I don't think it'll happen by May. At some point in the future, in my lifetime, we'll get to 5,000. But I think the high is in. You know, and I've been saying that since we broke in January when we hit that. It's like I think we're done. I think the high is in. Let's see what else. So with the downtrend market, will that cause housing prices to fall? But what interest rate will that go up heavily? Yes. So if you look at 30-year fixed rate mortgages, they're based off the 10-year. So we are now seeing 30-year fixed rate mortgages at 5%. Mind you, back here where I put this yellow box, you could have gotten a 30-year fixed rate mortgage for under 3%. And now we're up here, you're looking at 5%. So yeah, it's spiking. And that's not even including all the rate increases. That's just speculation. You know, if that does continue, let's just, play devil's advocate and look at the longer term chart here. Here's a weekly. You know, I think very quickly we're going to challenge these highs at 3.2. And after that, you start to leapfrog up. And I mean, heaven forbid we should get to 5%, but given the rate of inflation and the rate that they're going to be unloading the bond portfolio, they're going to have to create enticement for people to buy these bonds. You could see 5% next year, which would be insane. That means you're going to be looking at probably an 8% 30-year fixed rate mortgage. That will put a damper on the housing market. Now, that's very aggressive, right, Alvin? An 8% by next year, that would be pretty crazy. But is it possible? Absolutely. Absolutely possible. Tom says, unemployment is down, but labor force participation is down by over 1 million from the pre-COVID high. Yes. And that's a big factor to it, right, is people who just stopped looking. Merlin, when you are trading the S&P, do you look at the most weighted stocks in that index, FANG stocks, before you make a decision? No. I'm generally looking at the price chart of the S&P, period. Now, when earnings come out, it's nice to know what's going to impact it the most. What are the warning signs, right? What are the canaries in the coal mine that's really going to bring this market down in a big way? Well, that's definitely what I want to be looking for. And in this case, it's these guys: Apple, Microsoft, Amazon, Tesla, Google, Berkshire Hathaway, which none of us trade, and Nvidia. I mean, these are the top ones. The top ones in the S&P 500. So if I'm trading those markets, and I know that tomorrow we've got Facebook reporting. I'm sorry, it's not Facebook anymore. It's, is it even on here? Meta. So Meta's number 11 in the S&P 500, but it's much higher up than that on the Nasdaq 100. What else do I got? Any reason F&G, no, got that one out of the way. Can earnings targets be manipulated? Absolutely. Can analysts deliberately set a target high if he has a bearish position open? Yes. There's no accountability for analysts. I was told there's sites that track the performance of different analysts out there, but no, when's the last time you guys looked to see how accurate an analyst was? Nobody does that. So yes, they can absolutely, using their popularity, using the name where they hang their license. So if they're a Goldman Sachs analyst or JP Morgan, they can use that name to have notoriety. And they'll go out there and make upgrades and downgrades and price targets, etc., like they did with Goldman. The Goldman one on Twitter was awesome, right? At $37, he says, "Oh, it's going to 30. It's way overvalued at $37." Dropped at $30. Elon Musk says, "I'll pay $54," and the same team at Goldman Sachs says, "That offer is not good enough. It's not good. It's worth much more." Well, you just said 30 was too expensive. That was your target. Now 54 is too cheap. Make up your mind, you liars. Anyway, how much time I got? We got to wrap it up. Let me go down to the last part here. Just saw headline news. Elon Musk, Twitter, $1 billion if he cannot see. Elon, do you think this is BS? How to get Twitter stock to go low? No, I think he's going to buy it. He's got the cash secured. If not, then the board could sue him. So, yeah, I think he's going to definitely take it over. And again, there was a comment here. Let me read it real quick. I want to make sure I get this whole one because it's interesting when you look at Elon Musk, right? Where was it? Here it is. So I got 11 minutes left. Joel, and it's a good comment. He says, "I can't help but to think that Elon has bought Twitter for nothing more than his own personal agenda. I feel like there's something deeper in his plan than saving free speech. Maybe to access the algos and analytics to fuel his gains. I don't know. I just can't help but think he's got deeper intentions to benefit himself." And again, that could very well be true. I personally, just in watching what he's done with different companies, I don't really feel like he is concerned about his wealth. I don't think he's doing this to make more money. And listening to some really interesting interviews with people who've dug deep, and again, he could be lying, but I get this sense that he wants to improve humanity. He's got FU money. He's got more money than anybody on the planet. So I think that what he's doing is taking something that, in my opinion, Twitter was fundamentally broken, right? There are a lot of issues with it, and saying, okay, as a tool of communication, Twitter's amazing, but let's make it better. Let's make it so it's not as manipulated. Let's give people the right to say really what they want to say without having a censor board behind the scenes and other things. There's a lot of factors out there. So I think that I like to think he's doing it for the good. I mean, look at the Boring Company, right? They're trying to save the issues that you and I hate. Now, you might be in Wisconsin right now and not have bad traffic. I live in Southern California. It sucks. I mean, I hate driving. That's why I have electric bikes. I hate driving down here. But Californians think they own the road. A Californian will get on an 8-lane freeway and jump immediately into the fast lane and go 55 miles an hour. That's how dumb the drivers are out here. So if we can have a tunnel system where I can literally get on a tunnel and in an hour be in Las Vegas doing 800 miles an hour, If Elon gets rich off of that, awesome. But you know who benefits the most from that? Me and humanity and less congestions on the road. Same with SpaceX. Tesla as well. Let's get away from our dominance on fossil fuels and help clean the atmosphere. Granted, some of the rare earth minerals needed to create these batteries are damaging the earth too, but at least it's a choice that we have now of how do we want to damage the earth? By driving my Volkswagen TDI diesel, which has 50 times the emissions they announced, or I can go electric and know that my lithium was mined and killing some rainforest village. It's a losing proposition either way, but I like to think that what he's doing is not necessarily monetarily driven. Granted, he's making money off of it, and I'm happy that he's the richest man in the world. Let him make more money. If you make our lives better as a humanity, as society, then bring it on. Go for it. I could be totally wrong. In Wisconsin right now, we don't have bad traffic, but our weather's sucking. It's a trade-off, right? I love my weather. That's why we got bad traffic. Watch Bad had Elon did about. Well, I mean, he was doing bad at the beginning with SpaceX, and he was doing bad at the beginning with Tesla, and he's brought him around. I mean, I like to think that we would all agree. Well, maybe we don't, but would you agree that as a species, that going into space and colonizing another planet is a security measure for us? Do you think that that's a smart thing to do? If we destroy this Earth, whether that's global warming, climate change, nuclear holocaust, who knows what, some big seismic activity, a comet hits us, and humanity as a whole dies, right? If we completely disappear, then this whole story is done. However, if we have colonizations on other planets, Mars, even the moon, heck, get something on the moon, if we can start to build different ecosystems, then it preserves our species as human beings, right? I think it's an interesting way to look at it. And why haven't we done it soon enough, right? Why have we not done that soon enough? Anyway, I'm venting over here. Let me go to what's cooking on for tomorrow's plan. Here is the big stuff. We do have a popcorn trade of the day, which of course I'm excited about. I love the popcorn trades of the day, and that is Facebook. Facebook or Meta Platforms will be reporting earnings tomorrow. That's after market close. We also have Ford, Qualcomm, PayPal, and Align Technologies and Amgen. That's all after market close. Now, before market opens, you've got Boeing and Kraft Heinz reporting earnings as well. And on the economic front, we do have a bunch of stuff happening tomorrow. They're looking at the preliminary wholesale inventories numbers. They're expecting a sharp drop there. They're also expecting further contraction in pending home sales. You have crude oil inventories coming out. One that's of interest will be ECB President Lagarde will be speaking. Last time that happened, there was a lot of market volatility around that speech. So be careful what, and this can impact any asset class. It could be oil, equity markets, bond markets, and even cryptos with Lagarde because she kind of throws stuff out there. Now, we do have a rate announcement tomorrow. You can see Bank of Japan has their rate announcement, expected to stay right where it's at. No big deal there. And that, my friends, is the majority of all your major economic announcements for tomorrow. Let me see. Did I miss anything? Colonize the Salton Sea first. Didn't Elon drop out of high school? I don't know. Either way, he's a very intelligent man. I mean, he's I don't know. Gallo, I agree. We'll probably mess it up as well. But at least it gives us the opportunity, the chance, right? I don't think it'll happen in my lifetime, but it would be so cool to actually see a self-sustaining colony on another planet. If we look at the number of galaxies that are out there, to say that there's no other intelligent life forms out there, any sort of living species on any of these galaxies would be ridiculous. The probability is just too astronomically high that there is other forms of life out there. Now, this isn't an alien show. It's just a fact show. But I think we owe it to ourselves to explore space. I mean, heck, if we can get into these crazy concepts like things like wormholes and all of a sudden I can go from one galaxy to another with some technology, give it a shot. Hey, Koja, thank you very much. Thank you very much. Tom says Elon has a degree, dropped out of grad school, I think. Either way, I'm definitely a fan of Elon Musk. I think what he's doing, especially with AI, his artificial intelligence, and just trying to improve problems around the world. Anyway, enough of my man crush for Elon Musk. If you guys have comments, questions, feedback, things you want to talk about, let me know. I believe we're going to have Corey Lane on the show tomorrow. It's talking options. Whoop, whoop. I like talking with Corey Lane. Always great having him on the program. If you have questions for Corey or myself, you can put those down below the YouTube video. Pick any YouTube video, but most likely the recent ones, and just post your questions there. Or you can email me at TraderMerlin@gmail.com. Until then, happy trading, everybody. I will see everyone on our Wednesday show with popcorn in hand to watch Facebook's earnings announcement. Take care. See you tomorrow.